Index investing is one of the most common ways to grow your wealth over a long period of time. You can think of an index fund like a basket of stocks that mirrors a particular index. If you didn't already know, index funds are a practical alternative to buying individual stocks. And the S&P 500 index is an index of the 500 largest companies in the United States. And it's filled with a lot of household names that you guys know, just like Apple, Microsoft, Amazon, Tesla, McDonald's, Starbucks, Netflix, Disney, and the list goes on and on. When you invest in an index fund that mirrors the S&P 500, you can think of it like you're buying a tiny piece of all of these companies. Here's how the S&P 500 has performed over the last 50 years.
This chart shows us that $10,000 invested in the S&P 500 in 1970 would be worth $512,880 today in 2024. You can see how all these major events negatively affected the market in the short term. You can also see how the market went to all-time highs immediately after. Who benefited? The people who understood that the S&P 500 has historically generated 8 to 10% a year on average for almost 100 years. The key that you might not know is you're not supposed to sell. The same way you don't sell your home when the housing market is down.
It makes sense, right? Think about how much all the companies that you're familiar with from the S&P 500 have grown over your lifetime. Think about Apple, think about Disney, think about Netflix, think about Meta, which is Facebook. And Facebook went from Facebook to Instagram to WhatsApp to now VR. Think about Google. Look at how much YouTube has grown, right? So it makes sense, the performance. All these companies have grown significantly over a long period of time, and they continue to grow. So how does someone buy an index fund? So the most convenient way that'll save you the most amount of money over a long period of time is to buy it in the form of an ETF, which is an exchange traded fund. You can buy shares on a commission-free trading platform such as Wealthsimple or Questrade. But does this mean that you're gonna have to constantly look at your app and buy shares? No, not at all. Fortunately for us, we're in 2024 and platforms such as Wealthsimple, which is what I use, have automated this whole process for us. We can now set up recurring buys to, for example, buy one share on the 30th day of every month and not even have to open our app. Now, this is not advice, but I just want to share with you guys what I personally do. I personally set up a recurring buy of VFV. VFV is the Vanguard S&P 500 ETF index fund. And I buy that in my TFSA through Wealthsimple. I'll make a separate video on VFV where I do a deep dive into why I specifically chose VFV out of all the possible index funds I could have chosen. I want to leave you guys with a few things. Remember, index investing is not for quick gains or any sort of instant gratification. The purpose of index investing is to financially take care of your future self. Buying index ETFs are great if you're willing to take responsibility to learn and understand two things. The first thing is commission-free trading platforms such as Wealthsimple, learning how they work. There are hundreds of tutorials on YouTube that you can watch for completely free, and I'm gonna make one too probably. Number two, gaining an understanding of the historical performance of the overall stock market or the S&P 500 or index funds in general. If you're able to do those two things, you could save yourself potentially hundreds of thousands of dollars over the course of your lifetime. Where am I getting hundreds of thousands of dollars? Well, there are alternatives such as mutual funds, which you'll be paying high fees, but these actually can work for some people. Yes, there are fees, but the opportunity cost of not investing and keeping your money in cash or earning minimal interest in the bank is a far worse option. Now, if you absolutely want a 100% hands-off approach where you pass the responsibility off entirely to someone else, there are mutual funds. And I'll make a separate video on the pros and cons of mutual funds for you guys. I agree that doing it yourself isn't for everyone. So whether it's mutual funds or index funds, I hope you guys learn and take action for your future selves. I'll see you guys in the next one.